Hi, I'm Luke, one of the directors at Plus Accounting. We have learnt from talking to our clients that they want more from us than just their accounts. They want guidance, advice and a range of products and services to make their busy lives easier. Research and development relief is an important area to understand and can have a big impact on the corporation tax liability and cash flow for a company. I will therefore explain R&D relief and how it can benefit you and your business in more detail.
Research and development, or R&D relief, is a corporation tax relief that aims to reduce a business's corporation tax liability. However, if the company is classed as small or medium-sized, it may be possible to receive a tax credit from HMRC instead. In order to claim R&D relief, your company must be liable to corporation tax. There are two schemes for claiming relief, and the scheme that applies depends on whether your business is in the small or medium bracket, known as SMEs, or the large company bracket. Today's presentation will focus more on the R&D relief for SMEs. An SME company is a company with fewer than 500 employees, annual turnover not exceeding 100 million euros and a balance sheet not exceeding 86 million euros. It is important to note that if your company has been subcontracted to do the work on behalf of somebody else, you can't claim R&D relief. So, does your R&D work qualify for relief? In order to qualify for relief, the work undertaken must aim to achieve an advance in overall knowledge or capability in a field of science or technology through the resolution of scientific or technological uncertainty. It is not just an advance in its own state of knowledge or capability. So, what costs qualify for relief? Qualifying costs include employee costs, including employers' NI, staff providers, materials, payments to clinical trials and volunteers, utilities, software, subcontracted expenses at 65% of the cost, and capital expenditure in certain cases. For SMEs, from 1st of April 2012, the tax relief allowable on R&D costs is 225%. Therefore, for every £100 of qualifying expenditure, a company could reduce its taxable profits chargeable to corporation tax by an additional £125. From 1st of April 2012, where applicable, a company could surrender or give up losses in return for a payable tax credit from HMRC at 11% of the loss surrendered. From 1st of April 2014, this has been increased to 14.5%. We will now look at some quick examples of how R&D relief would work in practice. These examples assume qualifying R&D expenditure of £20,000, giving R&D relief of £25,000. Example 1 looks at R&D relief where a company has made a taxable profit of £50,000, which would normally result in corporation tax payable of £10,000. After deducting R&D relief, the revised taxable profit would be £25,000, giving a revised corporation tax liability of £5,000. Example 2 looks at R&D relief where a company has made a taxable loss of £20,000. After deducting R&D relief, there would be an adjusted loss of £45,000. This loss can be carried back or forward for corporation tax purposes. Example 3 looks at obtaining a payable tax credit where a company has a taxable profit of £10,000. After deducting relief, there is a taxable loss of £15,000. Potentially, this loss could be surrendered for a payable tax credit of £15,000 times 14.5%, which equals £2,175. However, it should be noted that in order to obtain the tax credit, you would be giving up all the taxable losses, which would potentially be worth 20% tax relief on future profits. If you believe this R&D relief might apply to your company, you should act quickly. The normal time limit for making your claim is 2 years after the end of the relevant corporation tax accounting period. Other similar tax relief opportunities that you should consider are creative industry tax relief, film tax relief, animation tax relief, high-end television tax relief, and video games development tax relief. Thank you for watching.